big question here for investors continues to be this whole AI story. And if anything disrupts that AI story, remember what happened during DeepSeek? Just one announcement about this Chinese AI model, all of a sudden it put the whole AI into question. We had the market sell off because of that. That's the risk we kind of run right now. All right, let's talk a little bit about this morning, about what you need to know before the bell. Friday, market was okay, a little bit sloppy, sold off a little bit, sitting around 64.30. Everything is fine. Bull trend in place still. Again, absolutely nothing to worry about. But this has been a very, very interesting market. Again, it's been up one day, down one day, up one day, down one day, in this very defined stair-step kind of pattern higher here. It's not an unusual pattern, but it's a very low volatility pattern at this point. And again, we just kind of continue to kind of grind up here in this very elevated channel at this point. Again, nothing to worry about here, but just kind of unusual how the market has acted over the last week. Again, every little dip's getting bought at this point, but again, rallies aren't doing that well either. Sellers are showing up in these rallies. And we keep seeing this kind of battle between the buyers and the sellers here over the last few days. The sellers have been able to drag prices higher. Buyers are reluctantly paying higher prices. We're not seeing a real eagerness of buyers to pay higher prices, and that shows up in money flows as well. So again, we've seen this kind of weakness in the money flows as markets are rising. That's a little bit of a negative divergence, something to kind of pay attention to. We're also seeing a bit of negative divergence of momentum and relative strength as well. So as this market's rising, we're seeing a little bit of weakness and relative strength here at the same time. Again, that's not super worrisome, but normally when you start picking up these negative divergences, it generally precedes some type of corrective or consolidative action in the markets. So again, it doesn't mean that the markets are, going to have a 20% correction. Not saying that at all, but we could just flop around here for a while, not really make a lot of gains, be a little bit frustrating in the market here for a couple of weeks. The one kind of, again, one of the kind of the last supports for the market will be Nvidia. And again, that bar for Nvidia is set very high. So they've really got to come in and really kind of nail it on earnings. Otherwise, this market's going to be under a bit of pressure potentially from that. Again, the big question here for investors continues to be this whole AI story. And if anything disrupts that AI story, remember what happened during DeepSeek? Just one announcement about this Chinese AI model, all of a sudden it put the whole AI into question. We had the market sell off because of that. That's the risk we kind of run right now. Expectations for AI are very, very elevated. So anything that comes in here that changes the outlook for something like earnings growth, data center build-outs, CapEx spending, anything that changes that narrative, this market is really set up for a decent correction because, two reasons. One, this market is being driven entirely by the tech sector for the most part, and earnings expectations. We said before, if you take a look at earnings expectations on a forward basis for the S&P, it's about 7 stocks, and it's all these stocks that are tied up into the S&P 500 in this kind of AI space race, right? So Microsoft, Amazon, Meta, Nvidia, those are the drivers of those earnings. Outside of that, there is no earnings growth. So if you strip out those 7 companies, all of a sudden valuations are very problematic for the market. It is only those 7 companies that are keeping valuations somewhat contained at this point because of their earnings growth. So that's one risk. And then anything that changes that narrative on CapEx spending is the other risk because, again, that's where a lot of this growth is coming from. Palantir, as an example, is getting business from, areas because of this whole AI CapEx spending issue. We saw the whole issue show up with CoreWeave this past week. With CoreWeave, they're basically getting chips based on that they'll pay for them in the future. So this is a problem if anything changes that narrative. And this is some of that stuff that we kind of saw back in the dot-com era, where we saw a lot of kind of stuff being done to get things built out on fiber on future expectations of payments. And then if those things don't come true, it's a real problem for the whole market. So again, that's the risk that we run here. So again, just as that's Nvidia, that's the risk out there. They're kind of the last bellwether here for that AI. So that's one of the potential risks for the markets later this month. Just something to think about. But that's what you need to know before the bell this morning.